Hello and welcome everyone to the week ahead commodity report for the 11th to the 15th of March 2019, presented by myself, Phil Carr, at the Gold and Silver Club, and we will of course be reviewing platinum, silver, gold and crude oil for the week ahead. So first of all, on Friday we had non-farm payrolls data, and with that we actually saw quite a significant move here to the upside, certainly on the precious metals, with gold rising 1% to a one-week high on Friday, breaching back above 1,300 US dollars per ounce as we saw weak US jobs data denting the dollar. Oil prices also dropped on Friday after non-farm payrolls, with a 1% move to the downside as economic outlook weakened. However, we did see funds buy the dip on US oil last week, with hedge funds and money managers raising their bullish bets on US crude in the latest week as prices firmed on hopes of a US-China trade deal. So with that, we'll move over to the charts. We'll talk you through our forecasts and the key levels on the markets for the week ahead. Now, first of all, we'll start off with platinum. We covered platinum in detail last week, where we discussed that previously we had taken advantage of this whole breakout to the upside throughout February here, where we had banked 620 points on the long side of platinum, but we had completed the move. We saw resistance certainly come back in at the 876 zone, and in fact we were predicting the potential for platinum to then roll over, especially if we got a break back below Friday's lows from last week. That is where we could see acceleration to the downside. Normally the month of March is not a positive month for platinum. Normally you see a 2.3% decline in prices, and we certainly saw platinum prices accelerate to the downside. In fact, we hit the forecast levels there that we were anticipating. If you missed that from last week, go back, watch the report where we talked you through this exact trade idea. So essentially we've seen that break back below Friday's lows here, and that continued to follow through on Monday, on Tuesday, on Wednesday, on Thursday, and even on Friday we saw at the peak of the move over a 450 point move from the breakdown of the Friday's low there from the previous week. So that certainly continued to follow through throughout most of last week on platinum, and in fact it's actually now coming back into a buy zone here around the 800 to 810 US dollars per ounce zone. I would watch this going into next week, because we have seen a bounce higher on Friday on gold, on silver, oil as well into the close, and platinum around this level. Typically I like to be a buyer of platinum when it does get back to that 800 US dollar level. However, we're not quite there at the moment, but it might be that we've found a previous major level of resistance turning support around that 805 US dollar per ounce zone, and I would watch out for this going into next week to see whether we do break back above Friday's highs and whether we start to springboard higher from that zone. On the flip side, I'm very interested in also buying into platinum if it comes back within this zone of 775 back to 805 US dollars per ounce. This zone here throughout December, throughout January and February has typically been a really good buy zone for platinum and an opportunity to get in at value. So I would be looking at the opportunity to take on a position on platinum on confirmation on lower time frames if it was to revisit that zone, but there may also be a trade opportunity here if we do just very simply see a break back above Friday's highs as we go into next week and start to springboard higher, which then leads me over to silver, because we have executed a new trade here on silver on Friday from the non-farm payrolls. In fact, we've got a nice entry on this move here where we've seen a breakout to the upside into the close. It's been quite a strong push higher here for silver. Silver was certainly very oversold, and we in fact did see a revisit back towards that 15 US dollar per ounce zone, which we discussed on last week's report, that if we were to see a bit more follow through to the downside, $15 would be really the next major zone that you want to look at to see if we get evidence of buyers coming in. We did certainly see that on Friday with this breakout. Silver has pushed higher into the close, closing at $15.31 with a bullish engulfing candle here. If we put silver on the weekly chart, it's more apparent the price action that we've got here, where you've got a major level of previous resistance at $15 now providing support. What I would look out for silver as we go into next week is whether we then get a break back above the weekly highs, whether we've just overshot here too much to the downside. It's been quite a significant sell-off so far over the month of March. At the moment, silver is down 1.69% over March. Normally silver performs better than gold and platinum over this month, so usually silver has a decline of 0.5% over the month of March, but obviously it's overshot that with the big sell-off that we had last week on Friday, and also over this week as well. I would definitely say that's worth noting. When you have European Central Bank announcements and also non-farm payrolls in the first week of the month, typically that creates strength in the US dollar and does put pressure on the metals here, and that's exactly what we've seen. But it's the second time now, and this is more evident actually if I show you with gold, it's the second time after the European Central Bank announcement that gold the following day has broken out back above $1,300. So I'll show you this price structure going back to the last ECB announcement back at the end of January here. And you can see here, this was the week where we had the European Central Bank announcement, and this was the Friday, the day afterwards. So we saw this breakout to the upside, strong push higher, breaking back above 1,300 US dollars per ounce. If you look at the price structure here during the week of the European Central Bank announcement, which we've just had, and the European Central Bank announcement was on Thursday last week, we essentially consolidated and weakened on gold throughout Monday, Tuesday, Wednesday, and Thursday. And then on Friday, we had this large breakout back above 1,300 US dollars per ounce again. So if I just signpost those for you, you can see this was a breakout on the Friday after the European Central Bank announcement. And again, very similar price structure and finding support at quite a similar level here as well. So we found support last week on gold at 1,280 US dollars per ounce. So what I would look out for next week is whether we can get another break back above 1,300 and whether we can close above it and also break back above the weekly highs here as well. So you'll note very similar price structure to silver as well, where on the weekly chart, gold has closed with a rejection candle around that 1300 zone. It does have a bit more work to do. So ideally, if gold is going to springboard higher from here, it really needs to break back above 1,302 US dollars per ounce. Otherwise, it might hold below that level and just continue to consolidate as we go into next week. In summary on gold, week to week, gold moves within approximately a 200 to 250 point range. What gold needs to do in order to break out further here would be to break and close back above this resistance zone at 1,302 US dollars per ounce. If we break above that zone, we could then make a move and a recovery back towards those previous highs there that we saw the previous week. Now, it's not uncommon for the Monday after the Friday's non-farm payroll to see some retracements here because we've had quite a strong push higher. So I would be watching out for next week as to whether gold is going to pull back a bit and then consolidate within this 1280 to 1300 range, or whether it's going to be able to push higher next week and break back above that 1302 level. That will be very important because then it could break out back towards the recent highs here as well. Otherwise, we might just stay range bound. Now, moving over to crude oil, we discussed on last week's report that the sweet spot for crude oil over the last week or two has been 55 to 56 US dollars per barrel. Each time we are seeing retracements back to that level of support, we are seeing buyers come back in, and that's very clear as well from the commitment of traders data, where we have seen hedge funds and money managers, they've added to their positions over the last week, and we've seen several dips in crude oil, each time getting bought into. And in fact, as we got closer to the close on Friday, US oil drillers cut rigs for a third week in a row, which was evident from the Baker Hughes oil rig count, and that provided more support and a push higher for US oil into the close here. You can see that very clearly on the chart here, where US oil dipped lower on Friday around the non-farm payrolls, but then later in the session, buyers have come back in, and essentially oil is holding back above also that 21-day moving average, which we discussed previously. From a very simplistic point of view, when oil is above that 21 MA, you want to be more on the long side of the trade. When oil is closing and breaking back below the 21 MA, you really don't want to be long anymore. You want to be considering the opposite side of the trade. Now, normally over the month of March and then going into April and May, this is a very bullish time of year for oil. So we've been looking at pullbacks as buy opportunities. And also, if we were to see any major news about a trade deal between the US and China, that could automatically see quite a large move to the upside for oil here. There are certainly hopes in the market of a US-China trade deal as we continue throughout this month, and if we do see that announcement, that could definitely propel oil higher, and that is what hedge funds and money managers are also looking at here for the potential of a bullish news item like that to drive the prices higher. As we go into next week, what I'd like to see here, if we are going to see more momentum to the upside, would be a break back above Friday's high as a bull flag, essentially taking the price back towards the next major levels here, which is 58 US dollars per barrel, and then above that 59 and 60 US dollars per barrel would be the next major levels here. If we take oil out and have a look at that also on the weekly chart, you can see very clearly here where we're seeing it ricochet between support and resistance, but ultimately we have another positive close on the week here, and you've also got very clearly this bull flag formation on the weekly chart as well, where if we do get additional follow through to the upside, I will be targeting that major overhead level, first of all with 58, and then above that the 60 range. Look at the major support here as well. Major resistance back in 2016, and then major support in November of 2017, and more recently a lot of support around that 55 to 56 handle. It's definitely providing quite a significant zone where buyers are coming in at that level. If I flip it over and show you just the monthly chart here as well, you'll see where very clearly we've got this V-shaped reversal pattern in development, and we've been building up momentum since really January here. January, February, March, oil is up over 20% since the beginning of the year. So the overall momentum is to the upside here. And I want to see as we go into next week whether we will get more flow to the upside, more follow through essentially. On the flip side of that, if we were to roll over again and if we were not to follow through next week and we were to break back below 55 to 54 US dollars per barrel, if we break below Friday's lows, then you can expect a potential move back towards that major support here at the 53 US dollars per barrel handle. The price structure is not suggesting that at the moment, but that would invalidate any longs here if we were to roll over, break back below Friday's lows and then start to make a move back towards 53. Then at that zone you may see buyers come back in, but then it starts to look a bit precarious because you will be back below the 21 MA here as well, and on higher time frames you'll see the price structure starting to roll over. But overall, the price structure is looking quite strong here into the close with this rejection candle. All we need to do really with oil next week is break above the highs there, and then we could see more follow through to the upside. So I would certainly keep that on your radar as we go into next week. And of course, if you would like to become a member of the private members live trading room program, there is an opportunity for you to join us at the Gold and Silver Club. As a member, you get access to exclusive live trading room webinars. You have real-time trade alerts with the trade management, the exact trades that we're taking at the Gold and Silver Club. You have access to trading research, market insights. You get your own private individual members academy website logins where you can review all of our research, market insights, our trading strategies, our training material. You have access to support and one-to-one mentoring as well. So if you would like to join a community of successful traders, all you need to do is go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you. And also make sure you're subscribed to our YouTube channel. That way you're kept updated with all of the latest commodity reports.